So first of all, let me just thank each one of you out here for sparing out your time with me. And lately, we have been receiving a lot of queries regarding breakouts. Okay, so I assume it is because of the fact that we have been sharing some of the trades that we were taking over the last quarter. Okay, and we personally trade both directional as well as non-directional. And when it kind of comes to directional, just like most of others, like we also trade breakouts. So let me just so today's meeting is more or less to discuss about, okay, so what are the factors that we look into to reduce the number of false breakouts. And let me just make it clear. So please don't have an expectation that you can completely avoid false breakouts or fake outs. It is impossible. Nobody can actually kind of do something like some sort of a magic where you're going to completely avoid all the fake outs or the false breakouts. It is impossible. But rather, here we are going to discuss about, okay, what are things that we can actually do to reduce the number of false breakouts. Okay. So first and foremost, let's try to understand what a breakout is. Okay. So we have actually learned for ourselves that breakout is a phenomenon where a significant resistance or a significant support. So at any particular point of time, a significant level, that is a significant resistance or a significant support, manages to get broken. We say, okay, we have seen or we have actually witnessed a breakout. So that actually kind of comes because of the fact that at any particular point of time, either the buyers or the sellers, they kind of actually take charge over the markets. We see some sudden quick moves where either of the support or resistance levels are getting broken with some pretty good intensity because of the excessive selling pressure or buying pressure that actually comes in. Now, someone who is trading directional, that is like someone who actually has a bullish view on the markets, they would think about going for a buy position or a long position as soon as a breakout happens. That is, once a particular resistance level is getting broken, they consider going for a buy, expecting some sort of a good bullish side move. And on the other hand side, someone who is actually kind of having a bearish outlook on the market, if they see, okay, some sort of a significant support level is actually getting broken, they go for a short or a selling position, expecting some sort of a rapid downside move to come in, or what we refer to as a breakdown or a negative side breakout. However, all of us know that when it kind of comes to trading directional, or when it actually kind of comes to trading breakouts, the bad thing is that majority of the breakouts fail, or I could say more or less like 50 to 60% of the breakout trades actually fail. So initially it looks like, okay, a level is actually getting broken, but pretty soon the price picks up a bit and again it falls down and comes within the range. Or we actually see situations where, okay, the price is actually breaking the support level, but pretty soon the support breaks and pretty soon the price once again comes back within the range itself. That is, we feel, okay, some sort of a support level or a support level has broken or some sort of a negative move could potentially come in. However, these moves won't last for long. It just breaks and then it once again enters back into the range and continues within the range again. Or in simple words, what we could say is a fake out. Okay, or a false breakout could actually happen where once a particular level gets broken and after some time the price once again gets back in the range, and someone who goes for a buy position over here expecting the price to move up, so if the price just picks up and then again it falls down, his position would be running in loss. Same way, someone who goes for a short position expecting the price to fall down, they go for a sell, the price drops down a bit. Once again, if it comes back within the range, again, they would end up losing money after taking a short position. So this is what we refer to as a false breakout, where the price breaks, but once again, it comes back within the range. Okay, now let's actually kind of try to understand some methodologies that one could actually follow or stick with in order to reduce the number of false breakouts or to reduce the number of fake outs. Okay. So many times people ask us, okay, is there a way to avoid false breakouts completely? So I just quickly want to ask you this question. Okay, so let me just make this a bit more interactive, and I'll just openly ask you some questions. Okay, so let's make this as interactive as possible. So I'll just give you guys a quick question. I expect you guys to respond through the chat box, or you could actually unmute yourself and speak up also. So first question is, so okay, so can I have a volunteer coming forward, please? Someone who could be a volunteer. I could just unmute you, and we could speak. So Shirish is there. Yeah. So I guess he's the first person. So just so Vihan. Okay, we have many people. Okay, so you guys can just unmute yourself and speak up. The first person who can just unmute, you could just speak up. Hello.
Yeah, hi. Yes, sir.
Yeah. So this is a quick question. So which are the things that when you are creating a breakout, which are the ones, or which are the things that fail? Because breakout trades will end up losing. If I ask you to define those trades that actually kind of moves against you and makes you end up in loss, which are those trades? Okay, we have a lot of background noise. So in pretty simple words, as you guys actually know, you guys already are familiar with, okay? So when we speak about trades that fail, they are nothing else but false breakouts. So as someone who is trading breakouts, those trades that actually end up failing for you are the ones that we refer to as false breakouts. So if there is first point to be noted, if there was a way to completely avoid false breakouts, then you won't actually have any losing trade. All your trades would be completely winning because if you can completely avoid false breakouts, then purely it's just winning trades. Okay. However, there are some factors to be looked into to reduce the number of false breakouts. So that is what we are going to do. Okay. So first and foremost, let's talk about volume. Okay. So let's talk about volume. So volume is one particular factor that you could actually look into in order to avoid the number of false breakouts that you take. So when we speak about volume, volume is nothing else but the total number of transactions, okay, total number of transaction of shares that happens on any particular day. Okay, so for example, let's say that we see that okay, Reliance is undergoing a breakout with volume bars looking like this. Okay, a breakout is happening, and with the breakout happening, more and more volume is actually getting traded. Okay, so Reliance is actually undergoing a breakout, and with the breakout actually taking place, more and more volume is also being traded. So definitely, this is actually a good sign. So if we understand, okay, with the breakouts, the volume associated with those candles is keeping on increasing. Okay, so with the breakouts, with the volume associated with a candle, if the volume associated with that particular stock is keeping on increasing, that conveys to us that yeah, so with this particular move, okay, so with this particular move, there's a very large number of people who are getting inside alongside the move, and there is a very high tendency that if you were capable of entering at the time of breakout, you would be able to capture some decent moves within a very short span of time. Okay, the volume is actually being accumulated at a pretty good rate, and it is keeping on increasing with the movement also taking place. Okay. However, sometimes what we see is okay, when the breakout is happening, there is not much of a change in volume that is taking place. So what we personally check out for is that so whenever breakout is happening, we ensure for ourselves that the volume that is being traded on the breakout candle is at least like 2.5 times of the average volume of the last 1 week. Okay, so we kind of ensure that okay, when the breakout is happening, so this factor I'm specifically mentioning about The swing trades are the positional trades that we are taking. So we really don't trade intraday equity. Equity intraday we are not trading. It is positional and swings that we trade in equities. Okay, when it kind of comes to breakouts, we firstly ensure when the breakout is happening, the volume associated with the breakout candle is like 2.5 times the volume of the previous 1 week. Okay, at least 2.5 times. So for example, let's say that the volume bars were looking like this for one entire week. Now at that point of time when the breakout is happening, let's say the kind of volume bars that we have is something like this. Hi. പിന്നെന്താ ഇവിടെ കണക്ട് ചെയ്തോളൂ, ഇവിടെ കണക്ട് ചെയ്തു. ഒന്നുമില്ല, ഒരു ചെറിയൊരു ഓക്കെ. So just a second. ആയിക്കോ. Just a second, guys. Please pardon. We have some kind of deals happening, some property. So really sorry for the disturbance. Okay. So what I just wanted to convey. Okay. Yeah. So we personally trade on the daily time frame only. We don't do equity intraday because there's too much of a headache, too much of a burden, and the rewards that you can reap out of it is also pretty much less as far as we are considered. Okay, as far as we are personally concerned, we are not really good at equity intraday. We don't do equity intraday. Okay, how and where we can check volume? So Rajendra Kumar, let me just please mention, volume bars is very easy. Just search on Saroda. So this meeting is specifically meant on points to consider in order to reduce the number of false breakouts. Okay, so it's pretty straightforward thing. Okay, Rajendra. So we'll get back to your questions towards the end. So let me just finish the topics first. Okay, I'll answer all your questions towards the end. So what I was conveying is that if we actually have the volume bars like this, okay, we actually have the volume bars like this on the normal days, and when the breakout is happening, so let's kind of actually say that the volume associated with the breakout candles are like 2.5 times of the average volume. So let's say the average volume is somewhat like this. And when the breakout is happening, the volume associated with these candles are actually like 2.5 times of that of the average traded volume. Then it's kind of pretty confirming that, okay, this breakout could be one significant one, or this breakout could be actually one real breakout and not a fake out. So there are many times when people actually see that, okay, this is a resistance level, and just because the price slightly pick above a resistance level, they go for a buy position. So what happens in such scenarios is that, okay, they go for a buy position over here, expecting the price to move. However, if you kind of actually compare with the volume bars, the volume change would not be there. So maybe this breakout candle or the volume associated with this particular breakout candle would also be pretty less. So somebody goes for a buy position expecting some sort of a big upside move. However, this particular breakout volume is not at all something that you should consider as a breakout. So high chances that this is definitely going to be a fake out. Okay. I'll show you everything in charts. Let me just finish the topic. Okay, please, let me just finish the topic, then I'll show you. So in pretty simple words, what I just said, for the first factor that we personally consider is that whenever a breakout is happening, we ensure that the breakout is happening with some significant volume, like 2.5 times of the average traded volume of the previous 1 week. So this actually kind of gives us some sort of a confidence that, okay, there is some significant activity taking place, or there is some significant movement that has a potential to come in. Okay, why? Because there is a very large participation happening alongside with the breakout. So that is point number one that we look into, the volume confirmation. Now let me actually just move into point number two, or what we actually refer to as the kind of breakout. Okay, so when we speak about kinds of breakouts, See, I'll show you the combination of everything on charts. So please wait. So kind of breakout. So when we speak about the kind of breakout, what we are referring to is, so breakouts itself, we classify them into two parts majorly. So one is what we refer to as a consolidation based breakout. And the other one is what we refer to as an exponential breakout. So one is what we refer to as a consolidation based breakout, and the other one is what we refer to as an exponential breakout. I'll just show you a pictorial representation of the two. Okay, so if I have a look at the pictorial representation, I'll show you a pictorial representation. So I could refer a consolidation breakout to be something like this. A breakout that is actually kind of happening after a phase where the price is more or less staying pretty much range bound for some duration of time is what we refer to as a consolidation based breakout. Now there is another kind of breakout that we refer to as an exponential breakout. It usually happens something like this. The price really must not have consolidated for a long duration, or what I could say is, okay, the price would have touched this level once, came down again, touched this, and all of a sudden a big breakout happens out of nowhere. So this second kind is what we refer to as an exponential breakout. So please keep in your mind, okay, so kind of please keep in your mind, so whatever I'm mentioning over here, okay, whatever I'm mentioning over here is with respect to the 1 day time frame. So this kind of moves where out of nowhere or all of a sudden, if a big move basically comes in, this is what we actually refer to as an exponential breakout. Whereas a kind of breakout where the price actually stays confined or the price more or less stays range bound for a pretty long duration of time, and gradually with a volume built up, if it breaks, that is what we refer to as a consolidation based breakouts. Now if you kind of ask me, so which are the breakouts that has a higher tendency to succeed, I would say I personally don't know which has a higher tendency to succeed, but I personally like trading the kind one or consolidation based breakouts more rather than an exponential breakout. Why? Because when it kind of comes to a consolidation based breakout, usually we see that whenever there is a consolidation based breakout happening, we often see followed by this some sort of a retest. Okay, so some sort of a retest is pretty common in a consolidation based breakouts. Plus, the times when consolidation based breakouts usually happen, you are more or less capable of entering the trade with a reasonable stop, okay, and not such a steep stop. Okay, a reasonable stop. For example, let's say that you're capable of entering a consolidation breakout with a stop, okay, something like this. Okay, so let's say that you're taking a swing with your concerned stop loss equivalent to this. Obviously, it is going to be possible for you to achieve a 1:2, and this becomes more reasonable than achieving a 1:2 target for a stop loss which is actually so wide. Okay, so when it kind of comes to a consolidation based breakout, the kind of stop loss that you are kind of actually going to take is going to be more or less like this, whereas in the case of a exponential breakout, the stop loss that you naturally will have to take is going to be wider, and for you to kind of achieve a risk reward ratio like twice of the risk that you have taken is going to be a bit difficult. Why? Because just your stop loss is going to be pretty much wide, and for you, in order to capture something like a 1:2, the kind of reward that you should be looking out for in these kind of moves are going to be pretty much steep. Okay, so I can't say that okay, exponential breakouts don't work or only consolidation breakouts work. But from my personal experience, it is definitely going to be very tough for you to enter into exponential breakouts. Why? Because the moves could be pretty much fast and steep, and the risk or the distance to risk from your entry point. So, for example, if a normal breakout happens, more or less, if your stop loss is like a 2 rupee for a 100 rupee stop, in the case of an exponential breakout, your stop could be more or less like a 5 rupee. Okay, so that yeah, if you want to capture a 1:2, you have to capture a 10 rupee move. Whereas if the stock was only 3 rupee, then a 6 rupee or a 5 rupee move would have given you like a 1:2 risk reward ratios. So that's why we personally consider consolidation based breakouts to be a better opportunity than an exponential breakouts, even though there is nothing like, okay, only exponential works or only consolidation works, nothing like that. But managing the risk reward ratios, we personally find the consolidation based breakouts to work better than an exponential breakout. And the other factor is that entering into a position based on a consolidation based breakouts is going to be more easier for you to capture as compared to an exponential breakout. So these are the first two factors. First factor is volume, and the second factor is the kind of breakout, either consolidation or exponential, or what we refer to as an exponential breakout. So we look only into consolidation breakouts. Okay. Now, talking about the third factor, so it's actually kind of related to the open interest front. Okay. So I especially have a lot of limitations to get into details of open interest. However, I could actually tell you that, so when it kind of comes to long side positions that we take, we look into stocks that is in a phase of long built up. So I really don't have uh, the possibilities of completely explaining open interest right now. Why? Because that itself would be taking me around 5-6 hours. So we specifically look into stocks that is in a phase of long built up for long positions. Yeah, no stock. And when it kind of comes to short positions, we look into stocks that is in a phase of short built up. Okay, for short positions. The reason for long build up, because stocks in a long build up have a higher tendency to succeed if some sort of a bullish side breakout is happening. And on the other hand side, stocks in a phase of short build up has a higher tendency to give you a good bearish side move if some sort of a bearish side movement is taking place. So it's basically stocks in phases of long build up and short build up that we actually look into in order to take out our entry triggers. Now, so along with this factor of long build up, if a resistance level is actually kind of actually happening, we see for short covering on the call option side to take place to be more convinced before taking out our entry, especially when it kind of comes to trading index and all. Okay. So these are some factors that we personally look into. Now I'll quickly show you. I'll kind of uh, quickly show you how you could actually look into these parameters on the real-time chart. Okay. So I suppose my screen is visible. Yeah. So I hope you can basically see my screen right now. Okay. And uh, if you okay, so if you have a look over here, this is the chart of Marico. So Marico is one particular position that we have actually added to our portfolio recently. Okay. Now, okay, this one, the volume part and lecturing would be a bit difficult. So let me just get into L&T. So L&T is also another position that we had initiated, okay, upon a breakout, and our entry was at 1613. So it was a pretty simple breakout entry that we had taken. So we had taken out our entry on L&T at 1613. So I guess I had shared it on Instagram also before our entry itself, the night before. Okay, so just have a look at the kind of volume. Okay, so L&T was a stock that was in an uptrend. Okay, and now if I kind of actually have a look at the volume over here, okay, if I kind of actually have a look at the volume over here, the volume was more or less staying pretty much around the 2.5 million marks. And all of a sudden, from 12, 13, 14 July, the stock started picking up with pretty great volume. Okay, so if you have a look over here, from an average traded volume of around 2.5 million, all of a sudden the volume actually shot up to around 7.5. That is like 3 times the average traded volume. So that itself was actually telling us or giving us some sort of a confidence that okay, some strong hands are basically coming into this particular trade. So we went for a position with our entries at 1613, 1614, and this particular trade, once again, the stock was in a phase of long build-up at that point of time. And another factor is that, yeah, this has been a level that has been tested twice earlier. Okay, so over here, and later on over here too. And so this is, so to be specific, this was that particular move that we considered. Okay, so the price broke out. So in fact, if this volume candle actually flows something like this over here also, we would have more or less entered because we had some sort of a triangular pattern breakout taking place over here. Okay, so we went for a buy and we're still holding on to this. Okay, we have not cut it out. We're still holding on to this particular position. Okay, so here I kind of, I guess I can actually explain. I have been able to explain to you the concept of volume build-up and how you could actually look into the factors of volume before taking out a position to have more conviction to stick onto the trade. Now we very well see, okay, this level is actually being validated many number of times. The price is testing over here again and again. So we're still holding on to this position, and this is once again a positional trade. Okay. Now, the next part I kind of actually just wanted to mention is the factor that we're actually mentioning later on, what we refer to as a consolidation based breakout or what we refer to as an exponential based breakout. Okay. So if I have a look over here, just have a look at the stock BSE. So what is happening over here? So after this good bullish side move, okay, so after this pretty good bullish side move on BSE, so can I, what could I speak about the stock? So more or less, the stock after some pretty good bullish side move right now, it is actually kind of showing. See, my friend, I guess speaking in Hindi is going to be a bit difficult for me because I won't be able to convey the concepts better. Okay, I'm really sorry about it. Okay, fine. So just have a look. So if I have a look at the volume also, whenever the upside moves took place or whenever the bullish side breakouts took place, those were the times when there were pretty good volumes traded also, right? So this could kind of potentially convey to us, yeah. So maybe the bulls were taking rest for a while. The price was also consolidating. Now, if some sort of a further breakout could come in BSE, that could once again drive for a good potential upside move. So this is one stock that we have in our radar. So in fact, this particular stock gave something like a 30% move, and we were capable of capturing like a 10%. So we had a swing on this also. Now, some of you must be thinking, okay, this will work all the time, but let me just tell you, if you perform like 10 trades based on this, more or less 5 out of 10 trades will fail. Okay, so for our case also like that. But last quarter and all, last quarter, last year, last financial year, if we take as a whole, just because the markets were trending, that is really bullish. If we took 10 trades, more or less 7 out of 10 were winning. That is because of the thing that markets were bullish. So whatever you do, 5 out of 10 will fail. Even if you look into all this stuff also, false breakouts, good breakouts, etc., etc. Okay. Now Tata Motors, one particular stock, I'll tell you. So we personally had initiated a long side over here. So on this particular stock, we personally had initiated a long side over here. Okay. So we considered a potential good upside move to come in over here. So after a pretty decent consolidation for a while, Howsoever, what happened is that, okay, the volume confirmation was not pretty much evident. Howsoever, we went for a buy expecting some sort of a good bullish side move to come in. Howsoever, all this news, all this stuff came in, and the stock is trading like 12% down now after our entry. That is, we are in a loss of 12%. So as I just wanted to convey to you, yeah, even if you look into all these things, also things will definitely fail. However, looking into all these factors will give you some sort of a confidence to stick with the trade. So that's the most important part. Okay, okay, that's it. Now, yeah, I'm holding on Tata Motors. Yes, I'm holding on Tata Motors. No change in that. So yes, so I guess I have been able to convey to you the concept of what we refer to as a consolidation. So Tata Steel was also a stock that we have traded. We still have positions running. So we took out a buy entry over here. Okay, we kind of actually took out a buy entry over here, and just post our entry. The price just dipped like anything. Okay. Sorry, not this one. Tata Motors after our entry price dipped like anything. So in this case of Tata Steel, the trade is running at like a 22% up. After the entry, again some good buying volume came in. So that actually definitely favored our move. Okay. So please don't expect. So please kind of actually don't expect that all the breakouts are kind of actually going to win. So in fact, majority of your breakout rates are going to fail. That is the truth. Okay, so that is the truth. So majority of your breakout rates are kind of actually going to lose. But if you have some sort of a confluence in terms of volume, if you actually pretty much know, okay, the kind of risk or the stop loss that you will have to take is not kind of actually going to be too huge, you can actually take a trade. Okay, now we were speaking about the OI part, the opponent's built-up part. So I have a lot of limitations to explain each and everything about what OI all these stuff are right now. But I could tell you the easiest way that you could actually do is you can actually go to Obstra. There is a site called Obstra. Okay, and if you basically go to this particular site called Obstra, you can actually log in. Okay, you could kind of just use a free version. Is more than sufficient. If you use the free version, there's a section called as futures built up, and over here you can actually just look out for stocks that is in a phase of long built up. So just check out if these stocks are approaching some good bullish side breakout levels, then there is a very high tendency that some good move could potentially come in. Okay. Same way, you can actually look out for stocks that is in a short built up for negative side setups. So that can actually be definitely done. If you, what do we have to do to check futures buildup or options buildup? My friend, just futures buildup. Okay, there's nothing called as options buildup. Just click on futures buildup. Okay, that'll do the job. So you don't look into any future options buildup or stuff. Just look into the futures buildup. There's not options buildup, so we refer to as option change. Okay. So for example, let's have a look at some stocks that we see over here in a long buildup. So I kind of actually see, okay, IEX is in a long buildup, both cases. So if you would like, you could actually just take out IEX, just take out the charts of IEX, and you could actually see for yourself, okay, whether these particular charts are looking really bullish to you. So definitely the stock is actually extremely bullish. And in fact, the breakout happened somewhere over here. Not now. In fact, the breakout has actually happened somewhere over here. But just have a look at this. So we actually saw some pretty good volume built up taking place. So before the breakout, we actually saw some pretty decent volume built up taking place. And then the price broke off. Or then the price broke out. Okay. And right now also, if you have a look at the volume is actually still sustaining. So which basically conveys to us, yeah, there's pretty good participation taking place alongside with the breakout. However, if you ask me, like, will I have the courage to enter now? The answer is no. So already after the breakout, some pretty significant move has taken place. So I personally won't be having the courage to enter into this position at this point of time. So guys, just give me a quick second. I'm having an emergency call. Just check out what is there and just get back to you. Okay. Yeah. So, so we have received some questions like, okay. So one question that we have actually basically received is, see, there is kind of nothing like learn price action completely. To be pretty frank, so it depends on, see, what you're going to learn is going to be very much limited. But how much ever you practice or put in front of the screen, that is what is going to help you. Okay, so there is nothing like learn this completely, learn that completely, nothing like that. So for example, like if you just study the books of MBBS, you can become a doctor, but does that make you a good doctor? No. So if you need to become a good doctor, then you have to practice it, right? So same in the stock markets also. If you kind of learn all the charts, patterns, all this stuff by heart, it's not going to make you a good trader. You have to practice it. Same way over here also. So please don't think, okay, I learned this completely, learn that completely. No, nothing can be learned completely. But understand whatsoever you know, practice it perfect, or be good at it. Nobody can be perfect, but at least be 90% good at it, so that you can generate something out of it. So learning everything is not going to make you money, but understanding something, practicing it, observing it, reworking on it, and figuring out what exactly suits you is going to make you money. Okay. So learning everything is of no use. So you can just write down this is that, this is this. No other use apart from that. Okay, practice it. Whatever little you know, practice it. Okay. Uh, how to trade Bank Nifty? One of the easiest thing is you can trade pivot breakouts. Easiest thing. Okay, 15 minutes if you want, you trade pivot breakouts. Time frame we personally use 1 day. Okay. Best price action, tell everyone. You. Okay, what question is that? Best price action. If you're asking me the best pattern, you can actually kind of consider double top, double bottom. This could be the easiest thing. That works pretty good. Okay. My query is average volume to be considered for breakouts is stated for the delivered quantity. Amandeep, it is pretty straightforward. Just have a look at the charts. So what average volume do you need? Just look into the charts. You know, right? The volume. Just have a look at the volume buildup. So it's pretty much evident for you that, okay, the volume buildup that is taking place over here is like 4 or 5 times. Okay, it is kind of more or less like 4 or 5 times. Okay. Uh, the It is kind of like 4 or 5 times the volume that was happening with the early candles. So it's pretty much evident over here. Then what? You don't need any average volume or something. No need. You can just look into the screens. More than sufficient. Okay. I have experienced that pivot doesn't work in Bank Nifty. In fact, no, Vijay. Like pivots work. Pivots basically work in Bank Nifty, Nifty. Everywhere it works. So you need to know how to use it. That's it. Just if you kind of stick with it, it works. But obviously, the levels that you mark by yourself are more relevant. Okay, then pivots. How OBV indicator can be used with, I personally don't use honey, so it's better I keep my mouth shut. Please tell option chain. We won't be having the time to do that today. It's a bit elaborate concept. Said that my 5 lakh salary is gone. There is nothing right now. I see the market even when I'm surrounded. I can't get your question. See, please don't take excessive risk in the market. In this breakout, it can be used everywhere. It can be considered everywhere. This is some simple concepts that we had discussed. And as I mentioned to you, is not kind of actually going to give you 100% winning breakouts, but definitely it will help you to reduce the false ones that you take. Okay. Only on LNT chart when you showed that there is a volume of 7 million, but let's say the next price fell. So the thing is, we were in the trade. So once you are in the trade, if the price falls, there is nothing you can do. So in fact, like DLF is also another position that I'm in. That is also trading in a loss. So you see DLF right now. Okay. So I personally took a buy position in DLF over here. Okay. So I took a buy in DLF over here, seeing very good volume. So this particular day beginning, okay, this particular day opening itself, I took a buy. So seeing a good rise and expecting the price to actually manage to break out, I entered into a long position in DLF. However, that trade failed. there is nothing that is guaranteed that okay, the breakout is basically going to win. But if you have the confluences favoring you, you can go for a buy. So I personally took a long position over here. The price dropped down. Now once again, the price is more or less at my entry. I'm not making any profits, not making any loss. So that's the situation right now in the DLF trade. Okay, small loss, some 1% loss or something. So my entry was around 339. See, daily chart, you can use the daily time frame, Rajendra, to get the daily volumes, right? You won't recommend intraday equity. I personally can't trade intraday equity in the present market condition. It's very difficult for me, so I don't do it. So I personally do intraday options index. I do intraday option strategies, weekly option strategies, monthly option strategies. I take equity swing positional, intraday commodity crude oil. That's it. I can't do it, but that doesn't mean you shouldn't be able to do it. You might be. Many others are doing it really well, but I personally can't do equity intraday in the present conditions. It doesn't suit my trading style. Okay. I personally won't recommend anything I personally don't do, right? So I can't trade equity intraday. Key area to enter a trade and when it's late to enter. So person to person, it would vary, Farid. So just design a setup for you. You will be like, okay, so within this percentage of move, if more than this percentage of move takes place, you don't enter. Make a trading plan for you. State your trading plan in Bank Nifty. So see, one of the setups in Bank Nifty that I follow for week expiry days, I have shared it already. You just check out my channels. You can just check it out over there. I can't explain. It will take me some good time to explain it one by one. Okay, guys, like, see, to be pretty frank, I seriously don't understand the kind of ethics that some people out over here has. Okay, so you kind of actually just behave yourself. So it's kind of not really so cool to call out somebody else. Okay, so just saying hi to some girls is not so cool. Okay, so just make sure that you maintain your behavior. So especially when you're in a public platform. Okay, so it feels so sorry to see people like you. Okay, so I'm not mentioning any guy's name out, but you better mind yourself. Okay. Should I book my long-term profits as markets? See, we can't say where the market stop is. Okay, so nobody can actually kind of say where the bottom is also. Okay, so nobody can say where the top of the market is, not the bottom of the market is. None of us can time the markets. None of us are capable of timing the markets. So if you already have holdings, you are at 80% profit. Ankit, something that you could potentially consider is you allocate some of your positions into uh, some defensive stocks. So what we personally have actually done is we have started out taking positions in defensive stocks like ITC. We have added on positions in Marico. So these are some stocks that we personally took. Okay. So you could also do the same. You could kind of actually consider adding some positions in defensive stocks by booking a part of your profits. Okay. So that can definitely be considered. Call വന്നിട്ടുണ്ടായിരുന്നു. So yeah, volume works in Bank Nifty, definitely. Can you exit at 350 in DLF? Okay, so please, Ahir, let me just tell you. I just wanted to say, so when you're getting started in the market side, so first thing, so John, uh, don't be too like too focused on completely making money. Be focused on identifying a system that works for you. So once you have a system, okay, fine, it'll make some sense. But unless you have a system that works well, there is no point. Whatever you do, you'll not make money in the markets if you don't have a system. Okay. So as long as you don't have a system that you're following, it's not going to do any good for you. Okay. So guys, like, so How to make a system? So that is also there, my friend. That's also there on our dashboard. Just have a look at it. Okay. It's already there, Ankit. In fact, it is already there on our channel. Just have a look at it. So in fact, like one of the systems, like the step-by-step things that we had looked into before developing the system is also mentioned. So kindly have a look at it. So I guess I'll share it too. Okay, so option chain is a very elaborate thing. So I won't be doing it over here, but maybe I can do a video series. I'll consider doing that. Okay, but see, let me just mention something. So something that I feel really bad about. So in fact, in this particular meeting, okay, so okay, I guess I have answered all the questions. Okay, so there is this person called Vikas Cheruku. So he basically has been calling out different girls. Okay, so who were kind of different women who were basically attending the meeting. So it's kind of actually pretty bad. Okay, so because like let me just make it a bit clear. So it's pretty bad. It's kind of actually pretty indecent to kind of actually call out each person and say hi, how are you. It's kind of a pretty indecent. So I'm just removing you from this meeting. Okay. So see, this kind of behavior is not at all tolerated. Okay. So I seriously don't care who you are. I just remove the person from the meeting. So I just saw those messages late. So guys, if you have any questions, you can feel free to ask. Please speak a little bit in Hindi. So what shall I speak? I know how to say my name. I know how to say my parents' name. That's it. Please tell how volume help in banking. Okay, so because like when it kind of comes to Bank Nifty or when it kind of comes to any particular segment, the concepts I have mentioned works in the same way. So whenever a breakout is actually happening, you need the breakout to happen with some significant volume built up. As simple as that. Okay, as simple as that. So it's not like okay, this is the way how volume should work in Bank Nifty. This should be the way how volume should work in Nifty. No, no change. Okay. Can you please tell Tata? Okay, sure. Why not? Let's have a look at the stock Tata Power, just like our friend had asked for. So talking about the stock Tata Power. So first of all, the stock right now, if you actually see, after some pretty good bullish side move, okay, after some sort of a good bullish side move, right now, okay. So right now, what we actually see is the price has been more or less finding some sort of a rejection or a resistance at this particular 130 to 136 region. So if somebody is to look out for a breakout, then you would, or somebody is actually to check out for a long side position, then you should actually be considering to enter into a position based on, okay, so you should think about entering into a position that is actually based on a breakout of this plus the kind of volume associated over here should definitely be like 2.5 times the average traded volume. So these are some factors that we look into. So we look into the built-up factor also. Okay, please tell about LIC housing finance. Please tell about operators on stock. So Rajendra, that's what I said. It's like a bit too much to explain right now. Talking about LIC housing finance, more or less looks like it wouldn't be a stock that I will actually go for a long. Okay, it personally wouldn't be a stock that I'll actually go for a long because this doesn't look like a good bullish one, or this doesn't look like a bearish one. This is actually more or less looking like uh, after some sort of a good bearish side move, it is gradually picking up. So I personally wouldn't enter into a trade over here. So looking at the chart, this chart itself is looking confusing, right? Just think for yourself. So I personally don't consider it to be really bullish, but something that is good for you is that the realty sector is doing good. Okay, so the realty sector is basically doing good. So if you get some sort of a positiveness because of that, yeah, that would favor you. But as far as the charts are concerned, this wouldn't be a stock that I personally consider for a long side position. Which is the best indicator? First indicator would be our brain. Okay, so in fact, whatever indicator you use, it should be tamed as per your requirement. So something that works for me wouldn't work for you. Indicators of price action is not indicators of price action. It is about probability. Okay, probability, then comes price action, then comes indicators. Should I hold Reliance Industries or should I book profit? See, I am holding Reliance Industries. I have Reliance Industries, and I kind of actually have a lot of clients who has a very huge holding in Reliance Industries, even shares that has been accumulated at 10 rupee. So people who bought at 10 rupee, people who bought Reliance shares at 10 rupee, who got a split twice in Reliance, are still holding Reliance. Okay, so I have people who have got Reliance in 1990s, so even before Anil Ambani, Mukesh Ambani split was there. Okay. Yeah, definitely. In fact, like on our channel, there are some sources on the same. Okay, you could just refer to that. Okay, so I guess like we had a very good interaction today. Okay, so our friend Naman Jain also, his father has Titan bought at 3 rupee and sold it at 50 rupee. Okay, great. So he shouldn't have sold it, right? Yeah. So Bharati Airtel is one stock that has been in the long built up, and we have our eyes on that. So there is one stock that we have an eyes on. So last entry that we took was in ITC. The one before that was in Marico. The one before that was in DLF. The one before that was in Atlantic. So these have been the positions that we were taking. Please tell about regarding open interest on stocks, how it works. So Rajendra Kumar, I just showed you what open interest is, what long built up, short built up, how you select stocks. But explaining open interest is a bit too much for this meeting. Okay, so thank you. I had a good interaction with you guys. Okay, but I personally feel very bad. Why? Because see, some people were kind of actually just like I felt it to be something like eve teasing. Okay, something like eve teasing fellow female attendees. That's kind of pretty poor. Okay, so these kind of behavior I seriously don't understand. So what kind of ethics these people have, right? So guys, like just make sure if you have people around you who behave like that, a tight slap on their face. Okay, that's what should be done. Now, how to scan for long built up and short built up is very easy. Just go to futures built up. So this is the easiest thing that you can do. In fact, there's a lot of resources related to options. So I would recommend you. I'll recommend you a YouTube channel. The name of that particular YouTube channel is what we refer to as. There's this channel called as Tasty Trades. Tasty Trades. It's a very good one. Then, if you kind of actually ask related to, if you are in India, definitely then there's something called a Saroda Vasity. Should refer to. You can go through these things. Then even we have a humble YouTube channel. We personally don't post any content. Okay, but still we have. Yeah, so we personally don't. Okay, so we personally don't have much of content, but we have some content related to this thing, F&O, Live Long Well. Then some of the other channels that you can actually look into. Many other YouTube channels are there, but I'm not mentioning any right now. Why? Because there's plenty of them. Okay. So yes, so if you are asking me about books, I would say, guys, like most of the books related to F&O are like foreign author books, and you would confuse yourself a lot if you start reading the books without understanding the basics. So that's why I'm not mentioning any books for F&O. Okay, but there are some books like Options, Bible of Options. Okay, Saroda Vasity. Saroda Vasity, please start with Saroda Vasity. Then you think about reading through other books. But don't get started by reading books. Why? Because if you get started by reading books, chances are that you're going to confuse yourself. Don't do that. How much percentage of 1 lakh should you get for a day? Don't keep in a daily expectation, man. So keeping keeping a daily expectation from the markets is going to be too much. Okay. Daily expectation, don't keep any daily expectations. Okay. So keep a monthly.